Hey everyone, my name's Andy from the Finding Value Finance channel. I'll be your host today. Today I've got Terry Papineau with us. He is a uranium investor, loves talking about uranium, really digs into the fundamentals and dives into it much more than say I would or I do. I'm kind of the top level guy looking for certain sectors. I think uranium looks great from a technical analysis standpoint. It looks absolutely on fire. Wanted to get him back on, ask him his opinion on kind of what he's seeing in the markets. So Terry, what are you seeing in the uranium market right now? What gets you interested? Maybe talk a little bit about 2022. Maybe if it's exceeded your expectations, if it was disappointing. What's kind of your thoughts on 2022, and what do you see coming in 2023, either positive or negative?
Well, first, Andy, I'd just like to say hi from sunny Turks and Caicos, and I'd like to wish all my fellow uranium investors a happy New Year. So I'm seeing we just came out of a pretty disappointing year. 2022 was disappointing in terms of the price of uranium performance and the price of the equities performance. However, it was not disappointing in terms of the catalysts that continue to form in the sector that really point the way towards a really promising future. Now, I'm hoping it's going to be 2023, but certainly 2023 is going to be the start of what we've been anticipating and waiting for so long. In the case of myself, I've been invested in 2017, so it's been a long ride. I thought it would be faster, but there are so many great positive things happening in the sector that it's difficult for me not to be really encouraged and pretty convinced that the future looks bright for nuclear and uranium equities.
Yeah, so what I'm seeing in the charts, and maybe you can tie this up with some fundamentals or anything, but I'm seeing a gigantic squeeze in all of these companies, and we just broke out. That would be last week. It was Friday that we broke out for some of the companies, not all the companies, but some of them are starting to break to the upside. Especially Camco and some of these other larger, we'll call it leaders of the group. What are you hoping, or what are you seeing? What do you want to see in 2023? Do you want SPUT to just take off here? What do we want to see to get this thing moving from your perspective? Because it looks like it's already starting to move from my perspective.
Yeah. So I think that we need to see a few different things. Last week was very encouraging because we saw money coming back into some of the equities, as you've mentioned. Most of them were in the green last week. So that's a good sign. But I mean, what I'd like to say about that is that the general markets they need to recover. So we had money come into the sector, but there's still large money that at some point in time is going to enter the sector. We haven't seen that yet. And I think that the larger amounts of money are waiting to see how the markets and what the central banks are going to do with regards to interest rates. Are we going to head into a recession? All that kind of stuff. I think that the large amounts of money are still on the sidelines waiting for that to kind of play itself out. In the meantime, we're seeing people that are, what I believe, familiar with the sector, have knowledge of the sector, maybe they were in the sector before, went into the side, sold off, went into the sidelines, and now are seeing that steam is starting to pick up again. So as soon as you see some green in the uranium names, then people just pile in like we saw last Friday. So one of the things is the whole broad markets need to recover for us to see big amounts of money come back. Second thing is that will also have an impact on what you mentioned, SPUTs, so the Sprott Physical Uranium Trust, for almost all of 2022. Now, not all of it, but I would say probably 95% of the days that SPUT was traded in 2022, they were at a discount to NAV, which meant that they couldn't raise money, so take in new money, issue new shares, and use that money to buy uranium. And in turn, when they're buying uranium, the price of uranium goes up. And when the price of uranium starts to go up, then the uranium equities go up as well. So because they were on the sidelines for most of 2022, now they did purchase in 2022, but for most of the time, they were at a discount to NAV. For example, all of December, they were at a discount to NAV the entire month. So they weren't able to take in money and buy pounds. So when that happens, the price of uranium does not go up. And in any other year except last year, when there was no activity on the spot market, the price of uranium would drop, but not last year. So actually, I'm kind of encouraged about what happened last year because there was almost no activity from split, especially in the second half of the year. They were very inactive in the second half of the year. So even with very little action by split, the largest player the largest financial player on the spot market, very little buying, the price of uranium remained completely stable, all like flat for that 6 months. So that to me tells me that the market is extremely thin. There are very few sellers out there. Those that do have uranium are just keeping it to themselves because they know what's going to happen. So there's very little uranium left on the spot market. The price of uranium on spot remained flat, even though there was no activity from split. Now, what I hope and believe is going to happen is once the turmoil in the broad markets globally, settle out, when big money returns to the sector, big money will return into split. When that happens, they'll be able to issue new shares, take in money, use that money, start to buy uranium on the spot market again, which is going to make that spot price go up and our uranium equities go up. I think that's going to happen sometime in 2023. I just don't know when. And when it does, I think it's going to be pretty explosive.
Do you think that we could have a confluence of events where we have like contracting going on and then spot comes in and also just hits it as well? So we got kind of double positive. You think that could potentially happen over the next year or two?
Well, yeah, there's the long-term contracting is one of the factors in what you mentioned as a confluence of events. So I've got a bit of information here. So last year, in 2022, there was 114 million pounds of uranium that was contracted. That's what's been reported. And so that's the largest amount of contracting activity that's occurred in the past 10 years, probably not since Fukushima, but in the past 10 years. So that's a great sign. That's what we've all been waiting for. But that's just a drop in the bucket. That 114 million pounds of uranium that was contracted. Just to understand, those contracts are written for delivery of a certain amount of pounds in the future. So it could be 3 years, 4 years, 5, even longer years. So smaller amounts of pounds. When you look at the supply demand models, like the projection models in the future, we're looking at about 180 million pounds of uranium that's being consumed. Right now, we're producing maybe 135 million pounds of uranium that's being produced. So there's a big gap. But as we go into the future, that gap widens. So if the consumption per year, let's say it remains static at 185 million pounds per year, which it won't, but let's say it will, then you would have to see a replacement contract rate of about 185 million pounds to replace the pounds, all of the pounds that are being consumed per year. But because utilities have waited a little bit longer, they're going to have to contract more pounds than 185 million pounds per year. So we're going to see large contracting volumes appear shortly. And I'm really looking forward to the Cameco conference call, their fourth quarter conference call that's going to occur either last week of January or first week of February. That's usually when they hold it. And we're going to get a little bit more information regarding the contracting that's been occurring. So that's a really positive sign. The other confluence of events, or the other factor, was what I just mentioned with regards to split. I think at some point split will return at a premium to NAV. The money will begin flowing into split again, and they'll begin, buying pounds off spot. But the other event is something that occurred last year as well, that others have spoken about, like Justin Huhn, for example, which is called a switch from underfeeding to overfeeding. So in the fuel cycle, miners take uranium out of the ground, and once it's milled, it's in a form called it's a powder, it's a yellow powder called yellow cake. But then that powder needs to be converted and into a gas, UF6. And so this year we've seen, this year I'm talking about 2022. 2022 started out with a bang. Like a large amount of contracting activity occurred at the beginning in January 2022. Everybody thought that that would continue for the remainder of the year. But what happened is when Russia invaded Ukraine, then that really shifted everything in the nuclear fuel cycle, where utilities now were ready to start buying yellow cake again. Now they had to really shift their focus from buying yellow cake to buying the other two services in the nuclear fuel cycle. So the first service is conversion, and the next one is enrichment. Russia controlled a large portion, 40% of each, a little bit more than that, but of each service, conversion and enrichment. So when they invaded Ukraine, then a lot of the Western utilities said, well, we need to find an alternative to what we need first. What we need first, like what I need to put into my reactor right now is a SWU, are the rods. So in order to be able to build those, I need enrichment capacity. So they focused on enrichment, and then they focused on what feeds enrichment. So, so you need to convert. So they focused on conversion. And just to give you an example of what we've seen in 2022 is that the conversion price went up by 150% during the year. That's for the spot service. For the long-term service, it went up by 47.2%. The enrichment spot service went up, the price of the service went up by 123%, and the long-term price went up by 105%. Now, when you contrast that, so the conversion prices and the enrichment prices went up like over 100%, right? Mm-hmm. During the year 2022. The price of spot only went up by 13%. And the price of U3O8 or the yellow cake always follows conversion and enrichment. So the utilities will first, when they're in a crunch, when they're in a bind, they need enrichment first, then they need conversion. Once they've got that secured, then they can focus on the yellow cake. So they haven't focused on yellow cake yet, but that's to follow. So it's like you can't, there's no point in a utility buying a whole bunch of uranium, U3O8, that it cannot then get converted. So they focused on those two services first. Now, I believe that, and that everything's pointing to that. Now the utilities are going to go back to, now they need yellow cake. They need U3O8. So the price of uranium, the long-term contracting, I believe is going to go up in 2023. And so will spot. So if you get, split with money to buy on spot, then you've got the utilities returning to the contracting table. You've got money flowing back from the global markets, into a risk-on situation. It's setting up to be a pretty interesting year.
Yeah, we've got a lot of money sitting on the sidelines. A lot of people are afraid, scared. So I think that money will come back and buy whatever in the markets, hopefully uranium. Are you still, I know you were heavily invested in uranium. I think it was 100%. You still 100% in uranium?
Yeah.
Still holding?
Yeah. Yes.
And are you still in the small guys, like the junior kind of exploration?
Yeah. So when I started my investing into uranium, I went to the better known names first, like the producers and the developers. But then as my knowledge grew in the sector, and I mention this quite often, there's a report that was published by Sprott in February 2007, where they did a review of the uranium sector. Now, the reason why I mention this report is because like they do a breakdown and analysis of a bunch of companies. There are maybe 35 companies, and a lot of them, they've got producers, they've got developers, and they've got explorers in there. And in February 2007, when the price of uranium was $70 a pound on the spot market, So this is important to understand because during that year, from February 2007 to July 2007, the price of uranium went from $70 a pound to $140 a pound. So I don't have the information of what those companies were worth when uranium was $140 a pound, but I could tell you that the uranium equities must have at least doubled, like the price of the commodity did. I'm assuming that they probably more than doubled. But so the reason why I'm mentioning this is because I look at market cap valuations, and when you look at the market caps of the producers, the developers, and the explorers, when the price of uranium was $70 a pound in 2007, which is 16 years ago now, like, you know, there's way more money in the market now. You know, there's a lot of reasons why valuations could be much higher than they were in 2007. But let's just take the February 2007 valuations. So a lot of explorers there are worth 100 million, 300, 400, 500, some of them 900 million. So when I start to look at what is the risk here, I was looking at explorers that had survived just a brutal bear market. So what are the chances that these companies go bankrupt at, when things are looking good for uranium? So I saw that the risk was pretty low there. So, and I decided to sort of shift most of my portfolio into a basket of explorers. And I was pretty lucky so I had 8 explorers at the time, and I got fairly lucky that several of them hit interesting results as they are drilling, they're exploring, trying to find uranium. And we just saw an example of one of them in November. So one of them is called Fission 3.0. I'm not going to go into the details, but they hit some pretty good. They've got a great core there. They've got great results, and we saw their share price react pretty aggressively to the upside. They're up probably 400% since November. So I was pretty lucky. Another good investment that I made was ISO pre-discovery. So if you invest pre-discovery, and if they find something, then it can be fairly interesting. Now, I'd like to say here that when I was looking or referencing that Sprott 2007 report, those explorers, like, not all of them hit uranium. Almost none of them had uranium. But because they were in a sector that was pretty hot at the time, their value, their share prices increased. So the return on investment was pretty interesting. So I decided to adopt that strategy. It's a very aggressive, a very risky strategy. But rather than investing in just one explorer, I had a basket of explorers, not knowing which one would hit or if they'd hit, because the odds are stacked against you. But the Athabasca Basin is pretty prolific for uranium, and they've done, I've been fairly well rewarded for that risk that I've taken on. I also have some developers and some past producers, but the bulk of my portfolio is in the explorers.
How's the volatility? Like, how are you surviving through that? Because these things are they're all over the place. How volatile has your portfolio actually been? Have you been moving up and down like massive amounts? And how are you kind of handling that volatility?
It's crazy. The volatility is crazy. So, like last fall, the fall of 2021, after the Sprott Physical Uranium Trust started buying pounds, because they basically bought out another fund that was buying uranium, and they changed the structure of that fund. And in July 2021, they started buying uranium actively on the spot market, which drove the price of uranium up fairly quickly. And we had a very dramatic, fun ride in the fall of 2021, where our uranium equities went up like tremendously. So, so that's a lot of fun. to see your portfolio go up very, very quickly, because the more volatile, the quicker it goes up. However, if you want that volatility to go up, then you have to be able to accept the volatility on the ride down too. And the volatility on the ride down is horrific. So, like from my highs in the fall of 2021, and then down and then back up to April 2022, reached some nice highs there. My portfolio went down from April to December by about 60%. So that's tough to watch. And and for someone that, like I see a lot of comments on Twitter, I'm sure you do too, of people that are really just fed up and just like, like, okay, buddy, like, when did you get in this trade? Why did you get in this trade? Like, what do you know about the trade? You're like, are you telling me that you just heard someone say, do this, do that, and that's what you did? Well, then, I'm sorry, but that's the way it goes. And if you did it, like you're buying when it's going up or close to the peak, and then it just crashed like the general markets did. Now, I'd also like just to add for a second, it's not just uranium that got crushed here. Like, Elon Musk, the richest man in the world, there was a news piece recently that he's the man that lost the most money ever. Like, his value went down by 200 billion. So a lot of these darling names have been crushed as well. But just to come back to the uranium sector and the volatility, is that it's not fun to watch the value of your portfolio go down by that much. And so I'm constantly reassessing, talking to other people that are in the trade, in the sector, trying to, still trying to obtain information every day. What can I learn? What can I read? What's out there? And, like, I think it's Fabi that Lara said, the uranium trade, prove me wrong or something like that, or try to give me a bear case. And nobody can come up with one, except a catastrophe, which we all hope will not happen. But the setup through all this time, and I keep saying, just gets better and better and better and better. And I'm going to say it here on your program, prove me wrong. Like, someone send me information or post something that shows to the contrary, and I'll look at it and then I'll reassess. But for the time being, when this occurs, I'm not a trader. I believe in the long-term fundamentals of this trade and of this sector, of this investment. And, I'm until I get information that really tells me it's time to sell, I'm holding. And that's what I've been doing throughout.
Yeah, I've been holding ever since I first talked to you in 2020. I've just plopped money down, been holding the whole time. And that's kind of how I've been playing it. I have not been trading in and out. I will add into companies and cost average in where I think, we're on supports or whatever. If someone's new to this sector, how would you play this sector with the least amount of volatility? Is that basically just buying spot? I mean, which is the Sprott Physical Uranium Trust? Mm-hmm.
Yes, I think so. So we've talked about it already, but split, will take in money. It can take in money when it's at a 1% or more premium to NAV. And when that occurs, they'll issue shares, they'll take in money, and those, they'll use that money. Once they have enough money, they'll begin to buy uranium. And so that's a play on the commodity itself. And, the writing is on the wall that yellow cake uranium, the price of it has to go up. There's not enough production to meet demand. And at some point in time, that price will reach an equilibrium where, new production can come into play so that there's enough uranium to meet global demand. Sometimes split goes into a discount to NAV. So for most of 2022, it's been at a discount to NAV, and certainly the second half of 2022, that's been the case for sure. And at some point in time, like, it was at a like 16, 17, almost 18% to NAV at one point, which means, basically you're buying it at an 18% discount of what it's really worth. So the risk there is lower. And, with all the information we have, it's pretty clear that the price of uranium has to go up. There's a famous Rick Rule saying that says price of uranium goes up or the lights go out. Which one is it? So the lights are not going to go out. So the price is going to go up. So that's a very fairly less risky. There's also Yellowcake that they're traded in London. They buy U3O8 as well. And there's a new fund that's coming out that's basically been the brainchild of Kazatomprom called ANU, and I think they're raising money right now, so they'll be buying uranium from themselves, from Kazatomprom, is my understanding of it. So those are the three vehicles where you could buy the Yellowcake, through these funds. Then there are three better known ETFs that buy uranium. So there's HURA, there's URA, and there's the Sprott Uranium Miners Fund. So those funds use the money to buy, equities into various producers, developers, and explorers of uranium companies. So they're less risky than buying individual equities because, you're in a diversified basket of uranium equities. Although, almost all of the uranium companies flow together. When they start going up, all of them go up, and when they start going down, they all go down. However, the explorers are the ones that present the most volatility in those trades. So those are the two sort of less risky ways to play this sector.
Now here's a question. If, let's say you were 25 years old right now, you got this uranium bull market coming up, and you've got all the knowledge that you have today, what would you tell your former 25-year-old self how to play this uranium bull market? What would you tell yourself?
Well, I have 4 kids, and my oldest is going to turn 28 this year, and my youngest is going to turn 23. They are all of them 100% in uranium. So that basically sums it up. And they're, because I'm helping them in this process, so they're in equities, so they're not in the in the less risky vehicles. So they're all 100% in uranium equities. Now, that's because they're my children. So we share information. It might be different depending on the 25-year-old that you're talking about. Like, I'd have to know there's specific circumstances. Like, I don't know, like, do they have loans and this kind of, like, do you know what I mean? But I have I have a group that I've mentioned before on WhatsApp, and I have a lot of young people in that group that are in uranium equities as well.
Yeah,
I would probably I would recommend, depending on the risk tolerance, it might be a blend of, the SPUT and the ETFs, or if their risk tolerance is a little bit higher, then it would be sort of like a portfolio of equities. If they can assume a little bit more risk, I would suggest something that's similar to my portfolio. But if they want equities but a little less risk, then there's great quality names out there. Like Cameco is an outstanding company. There's other names out there, and the developers and the past producers that are great names as well. So there's a variety of different scenarios that where we could build a portfolio depending on their specific situation.
Yeah, I'm a guy that flies at the high, kind of a high level, and I look at different sectors and I pick off different sectors. You're weighted very heavily in uranium. Obviously, 100% is a lot. I'm weighted probably more towards the 15 or 20% range of my entire portfolio. And then I've got a lot of other ones, and I consider uranium to be a little bit more speculative since these guys are not cash flowing. That's where I get a little bit, I kind of pull back a little bit. It's like, ah, man, if we just had a couple of cash flowers, I'd be dumping into it. But yeah, I think the opportunities here in uranium look absolutely excellent. Hopefully, from a chart perspective, it looks like they're all breaking to the upside. So, you know, is there any cash flowers in this sector? I mean, I think maybe Camco and Kazatomprom, right? That's really it, those two.
Yeah, yeah. Right now, those are the two. And like Chemical, for example, last year in that famous February conference call when he started with "It's time," you know, when they announced that they were restarting McArthur River, he also announced that they were increasing the dividend.
Mhm.
So Chemical pays a dividend. I think Kazatomprom does too. But yeah, it's taken a while. You've got quite a few, you know, near-term producers, past producers that can come back online fairly quickly. That'll be cash flowing. But right now, it's been pretty. Like I said, it's been a brutal bear market, and we're just coming out of it. And I'd just like to also say something with regards to the explorers, and I want to be very specific about this because people sometimes they'll put something comments on these videos. These explorers it's not investing. Like you said, it's speculating because they're not producing cash. They have no sales. Like they need to raise cash regularly. When they do so, they're diluting the existing shareholders. Sometimes they don't have the best, you know, terms when they need to raise money, and then all they do is spend money to try to find uranium. So it's speculating here. I want to be very, very clear. I'm comfortable in doing that, but you know, you have to know what you're doing.
Yeah, you got to have a certain mindset too when you enter this stuff, guys, because it's not for, this isn't like bond investing. It's not like buying a tech company. These things move. And
Yes.
if you're down and you've got you've got a amount of money that you allocate to it, you should be prepared to cut it in half and maybe cut it in half again if something bad happens, or we see a market crash or something like that, or you mistimed it. You could have FOMO'd in and bought a little too expensive and it just gets cut in half in like a matter of weeks. this
Yeah,
it can happen very quick. But on the upside, that can also move up hundreds of percents in weeks.
that's
So
correct.
it's not for the faint of heart. And the way that I would do it and the way that I do it is you have, for my, at least from my perspective, you have to have technical analysis at some point to try to get this thing when it's beaten down. Because if you
Yeah.
try chasing, you expose yourself to a lot of risk. So just wanted to make sure everybody understands that.
Yeah, and the other thing too is like I've mentioned before, like I've been buying these equities since 2017 when the prices were way lower than they are now. Now that being said, you know, I am deploying more capital as we're going forward because we've had like a huge pullback from the highs of 2021 and from April 2022, a very significant pullback. So, and Justin Huhn last week mentioned that like he didn't exactly call it, but he said, I think that the spot price is at a bottom here. And I think he was right. So when that turns around, you know, there's still room for significant gains, even entering the trade at this point in time. So when these confluence of factors, you know, align, and they may not in 2023, like who knows? I don't have a crystal ball. I wish I did. But when you know, money flows back into split, it's risk is back on in the general markets. The contracting cycle is, you know, comes back. Prices go up. The equities will go up, and the returns will make up for our patience and all the gray hair that we've obtained while we were waiting.
Yeah, it's markets, they typically go sideways for a long time. They consolidate is what we call it. And then you get these big impulse moves higher. We're waiting for those impulse moves.
Yeah,
And that's really what you have to do. So you're going to get a
yeah,
bunch of boring, in the beginning of the bull markets, you get a lot of boring, and then you get these impulse moves. So they go up, and then they consolidate, up, they consolidate. And then those consolidation zones become less and less as you get to this big bull market that we'll eventually see, I think. So what else do you have, Terry? You have anything else that you'd like to share?
Yeah, just like to say one more thing, Andy, with regards to when you asked me, if I was still holding uranium and the volatility and how can I manage to hold with the volatility and the drops. I've got my eye on the prize. Like I know there's no guarantee, but I know that the price of uranium, where it is now, the spot price of $49 a pound, is going to go up. I don't know how high it's going to go, but I can tell you that I expect it to go over $100 a pound. I'm trying to, I don't want to put stars in anybody's eyes, but I think that at least a $75 a pound and more. I think we're going to go over 100. I don't know when, but it's almost inevitable in my humble opinion. So that's my eye on the prize. So if the conditions exist where that belief is unshaken, there's nothing that points to the fact that that's not going to occur, then it's easy to hold. It's easy to say, listen, everything's still pointing in that direction. It's taken more time. It's taken more time. And yes, you have to be patient. But all of the, investment advice that you could read out there, they all point to the fact that it's more difficult to hold, there's more money made in the waiting. Like all of these, sayings with regard are all true, I believe, in this sector. And as long as all the fundamentals are pointing towards an increase in the price of uranium to 75, 100 and up, then I would be selling myself short for having been patient so long, because I would be, forfeiting the gains that will be coming, the future gains that will be coming, and I have very, very strong conviction of that.
Well, I mean, let's be honest. We're all here to get a massive payout. That's the only reason we're going through this volatility. It's the only reason.
I think this one, I think we're going to hit it out of the park with this one. That's what I think.
Yep. No, I agree. And I mean, that's why I'm waiting. I'm waiting. It's like, all right, just sit, wait. And I've got the same viewpoint as you. Look out ahead, stare at what's going to come, of what I think it's going to go. And then I just have to be patient as long as the market conditions are good. Just wait.
Yeah.
So what other things do you have to share, if you have anything else? I mean,
that's about it. I think we've covered quite. Oh, maybe I don't know, like some of the, maybe I was talking about the catalysts for the sector, but I mean, if you want one catalyst, which in my mind is probably sums them all up, because there's a lot, and there's a lot of people that talk about all of the things that are happening in the sector, but the one that I've observed that I think is the most telling, and that has really changed just since 2016, let's say, when I started doing my research in the sector, is politicians. Now politicians come out and say, they can publicly, say that they're supporting nuclear. They want to, increase their nuclear fleet, without being flogged, without being hurt in the polls. The wind and solar experiment has shown that it hasn't given the results that were expected. And, I don't want to belittle or criticize wind and solar. I believe that there's a place for those ways of generating electricity, but I don't think that place is baseload power. And so Germany is the perfect example of, wind and solar have not provided the results that were expected. It was very, very costly, they're in a pickle right now because they invested so much money and so they had to keep their last three remaining nuclear plants open. And, politicians, they don't like to say something that's going to make them less popular or lose votes. And now, like many countries, Japan, South Korea, France, England, Canada, you name it, India, are really now expressing public support for nuclear and putting money where their mouth is. Like in the United States, we've got the Inflation Reduction Act. There's money there for nuclear extension of nuclear power plants. They want money to create a national capacity to produce HALEU, which is needed for small modular reactors in Ontario. Ontario Power Generation just broke ground in December on the first small modular reactor. Like in 2016, we were talking about small modular reactors, but now they're becoming a reality. So, things are looking good. And the fact that politicians publicly are they couldn't do that 10 years ago. But now nuclear is back and I think stronger than ever.
Yeah, I think so too. I think so. Fingers crossed.
Yeah.
So, yeah, that's all I've got. If somebody wants to reach out to you, how do they reach out to you? You're on Twitter, I think, right? So
that's correct. Yeah, people, Terry Papineau 1 or 2. I can't remember if it's 1 or 2, but so they can. Okay, thank you. So they can direct message me. I always like to, receive comments and like I said, if you've got that bear case, I want to hear it or something, that people talk about fusion. You remember fusion? Fusion came out when we got that good news in November about fusion. And then our uranium equities went down like for about a week in a row after there was that announcement that I can't remember exactly what it was, but they achieved fusion in the United States. And then all of a sudden people are saying, okay, nuclear is dead. Well, listen here. For us to be able to, and I hope it's going to happen, to generate power with fusion, that's maybe another 20 years away. It's like, how are we going to generate electricity for the next 20 years? Nuclear, and the other thing that people really take for granted and don't take into consideration is the billions of dollars that companies, utilities have spent to build these nuclear plants. And the only way they can recoup their investment is to operate it and sell electricity from them. So this nuclear renaissance or generating electricity from nuclear is not going to go away, tomorrow. These plants are going to continue to operate for another 30, 40, 50 years, 60 years maybe. And all of that, they will be consuming uranium. And they need that's the only product that can feed them. So this thesis is not dead because, fusion might be, or some other, like this thesis for the next 10 years is going to be pretty significant. What's going to happen with uranium and nuclear.
Yeah, the only bear case I can think of is a delay in it, not necessarily a complete stop. And it'd have to be from the liquidity standpoint or from like the depression type standpoint where liquidity coming into the market dries up. They pulled all that liquidity back, and every uranium bull market has happened during a kind of a liquidity event. We'll call it like a bull inflationary period. But if you believe in the inflationary period that's coming, which I think I am in that camp, then that's actually more tailwinds. So, but if we didn't get the inflationary period, that's the way that you could delay it, in my opinion. That's the only bear case I can think of.
Yeah, and if we continue to see like a huge financial difficulty globally, where you need the large amounts of capital to build new projects, that would be a delay on the building of new projects, the building of SMRs. Like, for example, TerraPower with Bill Gates, they wanted to build a small modular reactor in Wyoming. That project has been delayed. not because of liquidity, because they can't secure the fuel for it.
Mhm.
So that's why there's such a huge investment in the United States to be able to um, generate or to produce your own HALEU domestically, because these new small modular reactors, they're coming. So there might be a delay in the building of new projects, but the ones that are currently existing and for which the models that we've the supply demand models projections, that's not going to change. And when you consider the other important factor, and I can't remember if I mentioned it, but in conversion, okay, now for many years when we were in the bear market, the conversion facilities were underfeeding the centrifuges. So underfeeding means you could leave the gas in there spinning longer. You can squeeze more conversion out of it. Now, because there's greater demand on conversion services, now they need to produce the services faster. So now, instead of underfeeding, leaving the stuff in there longer, now they need to speed it up. So the only way they can speed it up is overfeed. So just that underfeeding to overfeeding is going to generate like a 20 to 25 million pound shift in the demand for spot or uranium.
So
So
in order, let me
that's
see if I
another
get,
factor that could.
so just so I understand this right, the underfeeding, they spin it longer, and they get a greater efficiency of conversion versus overfeeding, which is a less efficient conversion. Is that a true statement?
Yeah, so the best way to describe it is like if you've got an orange juice stand and you don't have a lot of clients come to your orange juice stand, so you got a client coming every hour or something like that. Well, you could take you're going to take that orange and you're going to squeeze it as much as you can. You're going to get all the juice out of it that you can. So it's going to cost you, you're going to use less oranges to make whatever amount of juice that you're making. Now, if you get a lineup and you got to start making that juice real fast, you're not going to be paying attention to squeezing every bit of orange juice out of the orange, right? You're just going to. So it's the same kind of analogy, except way more complicated. So when they write contracts to deliver conversion services, there's what's called tails assay. So whatever's left in there, they'll say, okay, well, the tails assay can be so much. And so once they achieve that tails assay, well, there'll still be some uranium in there, let's say, and then they'll still continue to spin it. So it's going to generate a little bit more of that service that they don't need to deliver to the client,
Right.
so that they can keep to themselves and sell. But now, because they need to produce more, then they need to feed more uranium into it. So it's gonna, so where they were actually, they were generating more product to the market, so they were able to sell more product into the market, so that kept prices lower.
Yep.
Now, where they were generating product, now they're actually going to be consuming more product. So that swing is going to generate a 20 to 25 million pound of uranium demand that wasn't there before.
Which is massive,
So
because we're
which is
only
massive.
producing 100-something million pounds, right? 100,
Yeah,
whatever it is.
which is massive. So if the converters need to start buying uranium on the spot market to be able to deliver into their contracts, plus like a convergence of factors like you talked about, plus if split gets back into the premium to NAV and starts buying again, and then the long-term contracting, and so there's a lot of factors that could merge here and make it pretty special for uranium investors and speculators.
Finger crossed to the moon.
And I'm sorry about that really poor explanation of conversion and underfeeding and overfeeding. I'm trying to keep it as simple as possible.
No, it's good. I understand. I just look at it as the efficiency to convert from yellow cake to UF6. Okay. Well, that's all I've got for today, Terry. I don't know if you had anything else or any closing comments or anything.
It was a great discussion. Always happy to talk with you, Andy.
Yeah, I really appreciate you coming on for your time. And if you guys have any questions, you can reach out to them through Twitter. I'll put the contact information in the description link. And you know what? That's all I've got. So thanks for coming on, everybody. Maybe in the comment section, say go Terry for coming on. And yep, that's what we've got.
Cheers from Turks and Caicos.
All right. Happy New Year, everybody.